Hello everyone, thanks for joining us today and welcome to this educational presentation of Attention Traders. This is the trending tool that you've been searching for. And I really feel strongly about that because I've been actually using this very same tool for going on 4 decades now. I'd like to start out by sharing with you an example of this tool. See this chart here in the QQQs, that's the ETF that represent the NASDAQ index. Just looking at this information at the beginning of the year, there's really not enough data to really give you an insight as to which direction the market wants to go. But with the trending tool I'm going to be sharing with you today, you would have known right here at the very end of January, beginning of February, that this tool had generated an uptrend signal. So knowing that, you would have looked at the QQQs of the market it identifies only as a buy scenario with a buyer's bias. And had you been in it this entire time, you would have done fairly well because the QQQs have risen 25 points in the last 3 months coming into this last month now. So that represents hundreds, if not thousands of points in the Dow. So you're going to see how simple it is to actually identify this uptrend signal by applying our PTS Primo charting platform. This is the educational portal that teaches you how to trade with the trend. So welcome once again. This is going to be a great presentation, a great educational presentation. My name is Steven Primo, President and Founder of Specialist Trading. And if you're new to my presentations, we only have one goal in mind, and that's simply to educate you as a trader. I know a lot of you have probably gone to presentations before where you think, okay, he's going to teach us about some new system or some new method that's going to make us hundreds of thousands of dollars. Well, if that's what you think, you've come to the wrong place, because all we do is believe in that education is what really will sustain you. That's really what's missing from most traders' trading plans. So what we do is we provide you with education. We're not just some one-stop place where we fix all your trading problems by telling you to blindly follow what we trade. In fact, in my opinion, that's a recipe for disaster. The entire industry is based off that. And if that works so well, why do 80 to 85% of all traders fail? That's because it simply doesn't work. What you have to do is be educated, and then you can ultimately make your own trading decisions. So you don't have to rely on anyone or anything else. This is what we're trying to instill in all of our members across the world in over 115 countries and in virtually every state in the United States. So you'll see the attention to detail we really give in trying to educate you in today's presentation. But before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular technique, but please remember that we can in no way guarantee that any of the results you're about to see will be repeated in the future. And once again, since we're an educational company, please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, once again, I know we have a lot of you I've seen that follow me here, but for those of you who have not begun to yet, feel free to follow us on Twitter. There's a lot of great free information. Literally on a daily basis, I post signals our strategies have generated, lots of buy and sell signals in all of our strategies and methods, and little bits of financial education and financial wisdom along the way. So lots of great free educational information. Feel free to follow us on Twitter. All right, now, once again, as I stated in the opening statements, we're different from other companies in that our only goal is simply to educate you. The reason why I say this is because when I first started trading some 4 decades ago, I probably traded just like all of you, did the same things, wanted to look for that master system, that master technique, wanted to just get the buy and sell signals from some guru, and I just piggyback off what he was doing. And I did that for about a good year, and I couldn't make any money. I was treading water, and I worked on the floor of the stock exchange. So if anyone had access to a lot of information, you would think it'd be me, but I was struggling just as if I was just sitting alone in my room in my home trying to make my own trading decisions. It wasn't until my mentors taught me the specialist edge that I started to become consistent. And the specialist edge is built on simplicity, and it's built on consistency. So this is what we try to instill in all of our traders, and this is what I'm going to share with you today. So let's begin by sharing with you what this technique is and what my mentors taught me. What they taught me over 4 decades ago on the trading floor of the stock exchange was this, and it has stayed with me, and it's exemplified in all of our methods and in all of our techniques. They said, Steve, it is the easiest thing in the world to overcomplicate your trading. Virtually anyone can do that. I mean, think of it. It doesn't matter if you're trading 30 years or 30 minutes. You can overcomplicate your trading plan as much as you like. You can put a ton of indicators, the way I did when I first started trading, or you can virtually look at every news service or every trading guru or every chat room or trading room and have all these things come into play. It's not difficult, and it doesn't take a lot of character to do that. I've gone to some webinars where I see some systems they're talking about, and I have no idea what they're talking about. And I've been trading for 42 years, and I'm just as lost as if I started trading 42 minutes ago. I have no idea because they're that overcomplicated. So once again, my mentors taught me it's the easiest thing in the world to overcomplicate your trading. Anyone can do that. But on the other hand, it's the most difficult thing in the world to simplify your trading. That really takes a lot of character, and it takes a lot of courage, because what it really implies is that you're casting away and you're letting go of all these things we've been taught that are supposed to work. And it's kind of frightening because you thought, how can I let go of the news, or how can I let go of this indicator? It's supposed to work all the time. But once you finally get the courage to let go of those things, that's when you'll become consistent, by freeing up your trading and really just relying on the things that work. And they're very simple. They're extremely simple. So how does one simplify their trading? Well, the easiest way, and the first thing my mentors taught me, was by trading with the trend. I mean, think of it. How many times have you looked at a chart and said, well, gosh, I think this is really up too high. The market or this chart or this stock, this future currency pair, it's up too high. And then you go to a chat room and they say the same thing. It's overbought, or the indicators are so far stretched, there's no way it can go any higher. So you want to sell it, right? Or short it. Or the opposite. It's down too low. It's broken support. It's never been down this low before. You got to buy it. It's so oversold, right? This is the way traders like to trade, myself included when I first started out. But this is really what keeps you from being successful and consistent, because you're going against the trend. You're trying to pick when the market's going to top or bottom out. And it's just ridiculous. It's like trying to pick when you're going to win at the slot machine. You don't know. It's just, every once in a while you will win and you'll get this false sense of security that you're doing all right. But ultimately, if you stay there long enough, you're going to give it all back. Take it from someone who used to trade this way 42 years ago. It doesn't work over the long trend. So what you want to do is trade in sync with the trend. This is trading 101. We've all been taught this. The trouble is, everyone has a different idea of what the trend is, okay? These are some of the most common trending tools. A lot of people like to use indicators when the lines cross or when the indicators match up. Still, other traders like to look at patterns in the chart, higher highs, higher lows, lower lows, lower highs, things of that nature. Still, a lot of traders like to look at different time frames. I get this email on a weekly basis of, Steve, how come you don't look at the weekly chart to find out what the daily chart's doing? Or why don't you look at the daily chart to find out what the hourly chart is doing? Okay, those are all well and good, and they have certain levels of consistency. They're very generic. But in my 42 years of trading, they can't compete with what I have found to be the best trending tool. And this is a tool that translates what the market wants to do. Because see, all those other tools are pretty much a day late and a dollar short. What you really need is not a predictive tool, not a tool that tells you how high or how low the market's going to go, but you want a tool that's just translating on a tick-by-tick basis. It's translating what the market wants to do, because the market is really speaking a different language. If it spoke the same language as we do, if it spoke English, we would know exactly where to get out, where to get in, how much to buy, how much to sell. But the trouble is, it doesn't speak our language, or I should say more properly, we don't speak its language. We need a translator. So that's the best way to find out what the trend is, right? It's basically listening to what the market is telling you. Well, that tool is the PET D. You've heard me speak about it before. I would venture to say it's one of our most, if not the most powerful tool we have at Specialist Trading and Pro Trader Strategies. A tool I was introduced to some 4 decades ago, and I use every day in my personal trading. So what exactly is the PET D? For those of you who haven't seen my presentations before, well, it's got a number of definitions. The first thing is it's a proprietary algorithm. We're keeping it in-house because we have noticed that so many students that think they understand the calculation or how to properly identify the algorithm, they will just go off and use it totally incorrect. In fact, I go on the internet and on these sites every once in a while and see these chat rooms where people swear they figured out what the PET D is. And I laugh because I haven't seen one that is the proper calculation of the PET D. But the funny thing is, it doesn't matter, because the secret in the PET D is not the algorithms, not the calculation. The secret is in knowing how to properly apply it to your trading. It wouldn't matter if I gave everyone the calculation. You most likely would use it incorrectly and lose money. So it's a proprietary algorithm we keep in-house. And what we've done is we've made it a color bar tool. We added two simple colors, either a green or a red. Green means you're in a short-term uptrend. Red means you're in a short-term downtrend. That's it. Now, one of the best ways to apply it, it literally has dozens, if not hundreds of ways to apply it, but it is as a signal confirmation tool. So for any strategy, any method you have, if it generates a buy or a sell signal, the PET-D can be used as something to confirm that signal. If you get a buy signal, it should make the bars green. If you get a sell signal, it should make the bars red. And if it doesn't, well, most likely you'll have a lower consistency rate in the setup. That's one of the best ways to use it. Another way is as an early trend detector. So that's what I'm going to share with you today, okay? Because once again, the whole basis of this presentation, this educational presentation, is to show you this tool, how we can catch these trends before most people even know a trend has been established. And that's half the battle. Remember, we don't want to go against the trend. You don't want to ever swim upstream. Sure, you can ultimately get to your destination, but look how tired and how uneventful that event or that application is going to be. You're going to be so exhausted, and you're going to ask yourself, why did I do this? It would have been a lot easier if I just swam with the current at my back. That's what trading with the trend is like. Okay, so let's look at this example in Zion, okay? Obviously, someone looking at this would say, well, yeah, we're in a downtrend. Obviously, I want to sell this or at least not do anything. Let's say you had bought some puts and then this happens, right? At this point, you say, well, there's nothing that can really tell you that this trend was going to change. And I would agree to that because there is nothing that really exactly picks a bottom or a top. But what you want to have is an early trend detector. And the way you get that is by having a tool that translates what the market wants to do. So it won't get you in at the top or out at the bottom or vice versa, but it will tell you prior to a lot of other trending mechanisms. For example, once we add the PET-D, we see that we knew well in advance that these bars were colored red, that we should not be in this, or if we should only be looking into short. And we knew well in advance before it started to go up that this was not just a bounce before it went lower, but this was a full-fledged uptrend. Okay? So as it states in front of you, the beauty of the PET-D is that it tells you which direction you should be trading. And once you know that direction, you can virtually apply any technique, any method to that direction. So what a powerful tool to have in the back of your pocket. All right, so let's talk about a specific pullback technique using the PET-D, okay? This is a great pullback technique, and it will define either an uptrend or a downtrend. Let me share with you what I mean here. The setup, well, you're only going to use these two indicators, the 50-period simple moving average, which we call our buy-sell line, because that tells you the overall buy or sell trend, and then the PET-D, which is the shorter term trend. That's it. That's all you need for this simple technique, okay? And remember, most traders like to overcomplicate their trading. It's the easiest thing in the world to do. But once you start to simplify it by maybe having only a two-rule setup, that's when you start to become consistent. All right, so let's look at the uptrend technique. What if we're trying to identify an uptrend technique? All right, what you want to see is price above its 50-period moving average. And remember, this doesn't have to be stocks. It could be currency pairs, futures, Bitcoin, commodities, makes absolutely no difference. It could be a 5-minute bar, it could be a weekly bar. It makes no difference, okay? So don't overcomplicate things. So whatever you're looking at, whatever market, you want to see the price bars above the 50-period moving average. Now, after a red bar or a series of red bars appear, this will be above the 50-period moving average, an uptrend setup will most likely occur on the very first green bar. This is your sign that quick upward momentum may continue. That's the beginning of an uptrend. All right, so let's look at this example here. We specifically made it generic so you wouldn't get attached to thinking, oh, this must only work on stocks, or this must be an E-mini chart, so it only works in the E-mini. It makes absolutely no difference what time frame or what market this is. All right, so for all intents and purposes, it's the 50-period moving average. The price is above. Sure, we have one close above, then one close one close below, and then one close above. But the majority of bars are above the 50, and they're all red, okay? Now, we go a little fast forward into the future, and the next bar is green. So what's this telling us? Is it telling us that we've bottomed out? Is this telling us that this is the low, or is it telling us it's just a bounce before we go lower? The market is translating that it's not guaranteed, but there's a very high probability it wants to go higher and that the sell-off has concluded. So this may be the beginning of an uptrend. So from this point on, you should be only looking at the market from a buyer's bias. You can apply any technique, any strategy to the market now, whatever you're looking at. I don't care if it's a 5-minute or a monthly bar. It makes no difference. And look what happened, okay? And someone would say, well, gosh, how did you know that? I didn't know that. I don't have all these calculations, some master system that I only share with a few class members. The market told me. Everything I do comes from the market. It doesn't come from me. I'm not some master guru who can see into the future. I'm just doing whatever the market wants to do, and then I jump on board. And the market told me it wanted to go higher. Now, how high? I don't know. Or how low? I don't know. But I just try with the tools and things we teach you in our courses to try and stay in as long as possible, or maybe just take a quick profit and get out. It's up to you. Remember, the very first thing we said is that we want to put you in charge of your trading. I'm not telling you where to get in and where to get out. You're deciding based off of the education we give you. Now, we had a really nice run up here. Then, as with all things, they come to an end. We started to sell off. So we have this series of red bars again, okay? Does this mean the trend is over? Well, it means that particular realm of the trend is over. But what do we have here? Another green bar. So what's the market telling us? Not me, not some guy in a chat room, not some economic report or what the jobless claims were. What's the market telling you? Telling you most likely another uptrend is going to ensue. And look what happens in the next week. Okay, see how simple trading can be when you get out of the way. Now, let's look at a downtrend technique. It's basically the same thing. We just reverse the rules. We want to see price below the 50 now. Remember, the 50-period moving average is what we call the buy-sell line. If price is below, if the majority of price is below, well, then the overall trend is down. Now, even though price may be below the 50, you'll see a series of green bars, maybe one green bar or a series of green bars. A downtrend setup will occur on the very first red bar after that series of green bars. That's it. Okay, this is a sign that quick downward momentum may continue. As you see here, we say may continue. Nothing is guaranteed in the markets. All right, so we have what? We have maybe about 10, 20 bars here for reference. Someone could say, how can you make a decision based off this? This is not enough information. I need to know what the volume is. I need to know what the institutions are doing. I need to know what this guy in the chat room says. I can't make a decision off this. See, do you see how we justify making our decisions based off what someone or something else is telling us to do? Why don't we just listen to the market? And right here, the market's giving us a very strong clue. It's saying we have a series of red bars below the 50, followed by a couple of green bars, followed by one red bar. That's all we need to know, that the market has told us that there's a high probability, not a guarantee, but a high probability that a downtrend is about to begin. And that we should not care about the institutions, not care about some Fibonacci support, not care about Elliott wave, not care about the jobless claims, just care about what the market in front of you is telling you. That's the only thing you should be concerned about, the source of your trading, which is the chart in front of you. And what's it telling you? It's telling you a high probability a downtrend is going to apply, so that this means you don't want to be a buyer in this market. Your only bias should be from a seller's point of view. And sure, we went down for a little bit, not that much. And then look what happened. We start to have another series of green bars here, though. Should you buy? Is it time to buy? Well, we have one close above, but we close right back down below, and it's a red bar. The first red bar after a series of green bars. What's that telling us? What is the market telling us? The market's telling us that another downtrend may begin. Doesn't know how strong or how low this will be, but you should not be a buyer. And look what happens. Much lower, okay? Now, it looks as if we're starting to bounce again. We have another green bar here, but it's quickly followed by a red bar. What is the market telling us? Not the interest rates, not what the institutions are doing. What's the market telling us? It wants to go lower. It's a downtrend. You see how simple this is? Trading does not have to be complicated. It's extremely simple. It's ourselves, it's the trader that makes it more complicated than it has to be. And the reason is, I think we've been taught that the more complicated something is, the more valid it will be, the more money you'll make, the more successful you'll be. And in my 42 years of trading, I found out and discovered that it's actually the opposite. Those are the things that will lead you away from your success that you're searching for. It's the more simplified things that put you in the direction of becoming consistent. All right, so let's look at some recent techniques using this, or some recent examples using this particular technique, all right? And I'll show you the process exactly of how to apply this on our platform. Remember, all the examples and all the displays you're seeing are displayed on our PTS Primo charting platform. Now, this is what it looked like. We punch up QCOM, okay? This is coming from the middle of March to roughly about the middle to end of April last month, just a couple of weeks ago, all right? Once again, if you trade the way 99.9% of traders would trade, you'd say, Steve, I don't understand what you're showing me here. There's absolutely no information. We're going sideways for the past month. We're in a trend. We're in a range, I should say, not a trend, a range. There's absolutely no money to be made in a range. There's no opportunity. I'm going to go away from this and look for something that's really sold off to buy or really shot up to sell. Okay, once again, always basing off trying to go against the trend. But if you click on the buy-sell line on our platform, you'll see a drop-down menu. We have 4 different ways to view the buy-sell line. Click on the simplest, which is the 50-period simple moving average. And where is price in relation to that? Price is above. So in all actuality, even though it looks as if we're going sideways, the overall trend is up. Now we want to define things a little clearer, so we go and make it a shorter term refined way of looking at it. We click on the PET D. And all this is just one click away. It's one-click access, and it automatically appears. So what are we seeing now? Remember, we will see majority of bars above the 50 green, but every once in a while you'll see a red. The first green bar that follows after that is the market telling you it wants to go higher. Most likely there's an uptrend. But look what happened. Nothing really happened. Kind of went sideways, a little bit lower. Remember, this is not a strategy. It's not a system. It's just telling you the direction of the market. But so far, from the beginning of April to mid-April, nothing happened. We have another series of red bars and then another green bar. So once again, the market is giving us 2 clues. It wants to go higher. It's an uptrend. So whatever strategy, whatever method you look at, whatever method you trade, you should only have a buyer's bias. And sometimes things take a little while for fruition. But ultimately, the market was telling you well in advance what it wanted to do. You didn't have to read the interest rates. You didn't have to look at the earnings. You didn't have to look at support and resistance. You didn't have to go to that chat room. Why overcomplicate your trading when the market told you well in advance it wanted to go higher? In fact, it told you prior to a 30-point run. Here's the process to the downside. CTL. This was in December coming into the beginning of the year. Once again, someone would say, Steve, there's not enough information for me to make a decision as to if I should be buying or selling in this. Actually, there is. On our platform, click on Buy Sell Line, drop down menu, click on 50-period moving average. And yes, there is. Right off the bat, you know the overall trend is down. So you don't want to be a buyer. There's no way you want to buy if the overall trend is down. Remember, if you're swimming, you don't want to swim upstream. You want to swim with the current at your back. So if the current is going lower, you want to swim and go south, all right? So you're going to be a seller or a seller's bias if you're going to do anything at all. Now we want to have a little short-term view, so we add the PET D, and it automatically changes the colors, either green or red. Now, once you're below the 50, you'll see the majority of the bar is red, but every once in a while you'll see a green followed by a red. What is the market telling you? It's telling you most likely it wants to go lower. So there's a downtrend most likely starting very soon. If you are thinking about buying, you're most likely going to lose money or at least have a difficult time. Not guaranteed, but we're just trying to put the odds in your favor. It would be more advantageous for you to look for shorting setups and setups and do it very quickly, because look what happened, okay? How would you have liked to bought then? All right, so you have a really nice downward move coming into the beginning of the year. Then there's a little bounce. Once again, you see a series of green bars followed by the first red bar. What is the market telling you? It's telling you this bounce is most likely over. Time for another downtrend to begin. And look what happens, okay? So it went down from the beginning a total of 8 points, but you had a number of chances to get in and to get in again and again if you missed the first or second one. All right, some more examples. Once again, MAN, this was just a month ago, beginning of April. We have a series of green bars followed by a series of red bars. We have 1, 2, 3 closes below, but the first close right back up above. A little bit more aggressive approach since we had 3 closes below, but that's okay. Still following within the framework of the rules. An uptrend is established. the stock goes up 16 points coming into last week or so, okay? And if you didn't want to take this one, you had another chance to get in here for roughly about 10-point gain. How about APC? In these examples right off the bat, we're going to be looking at uptrends, and then we'll move over into downtrends in the exact same time period. Once again, it looks as if we're going sideways here in APC, but we are above the 50-period moving average. We have one red bar followed by a green bar. With just that amount of information, we know we do not want to be a seller. And that was a very wise decision because we went up 28 points coming into last week. There's no reason, if you don't want to look at fundamental news. I'm sure there was some announcement that came up here that why this gapped up so much, or it even gapped up again, or I'm sure we broke some resistance. I mean, you can look at that if you want to. You can overcomplicate it if you want to, but why? Remember, I used to look at this stuff 42 years ago. I stopped looking at it, and I'm still here. So there's really no need to if you don't want to. But we're not here to tell you how to trade. We're just here to educate you. If you feel you must look at earnings or go to a chat room, go ahead. But there's absolutely no reason with what we teach you. Here's an example in Apple. This was in March coming into April. We're above the 50. We have a series of green followed by 2 red bars and then 1 green bar. Market's telling us it wants to go higher. 30 points coming into last week in April, okay? And if you missed that, here was another example. 1 red bar followed by a green bar and off to the races. This was coming into last week. How about Facebook? This is a perfect example. All the bars are above the 50, so the overall trend is up. We have a series of red bars followed by 1 green bar, all right? Someone looking at this will say, Steve, this looks like we're making a ledge, and if we roll over, we're going to really go south. Sure, I'm not saying that couldn't happen. Sometimes nothing works 100% of the time. We have losses. But this is a very high probability uptrend technique. And as we can see here, coming into the end of April, just last week, 32 points to the upside in Facebook. These are, I often go to webinars. I say this a lot of times, and I'll see people showing these great examples like this. And then I look at the date, and it's like 6 months to even like a couple of years old. And we always like to pride ourselves in sharing with you things that happened within the last month, sometimes within the last couple of days, because they're happening all the time. If you become a student of ours, you see these things happening in real time. So it's not something that just happened, at the end of last year or so. We're trying to show you really current examples. Okay, the QQQs, we've been going up since the beginning of the year. How could we have found out at least that we were in an uptrend? Once again, the first thing you do is apply the 50. So we knew well in advance. In the beginning of January, we had the majority of bars above the 50. So the overall trend is up. Now we want to find out the short-term trend, all right? So we add the pet D, okay? We have a series of green bars followed by 1 red bar and then 1 green bar. That's our signal right there. The market wanted to go higher. That's all we had to see. Now, we didn't know it was going to go up this high, but we just knew that we should not be shorting the market, or if you wanted to get in, now's the time to get in before anyone else decides. And as you can see, we pointed all our students in the direction of an uptrend there. Now, if you missed that, that's okay, because the market gave you another shot. A series of 2 red bars followed by a green bar, another uptrend chance. This was in mid-March. And even if you missed that, another couple of chances right here after red bars. QQQs rose 25 points in 3 months. And someone would say, well, Steve, I don't trade the QQQs. That's okay. You could use this as a market trend identifier. In other words, if the QQQs were generating uptrend signals, don't you think that maybe a stock that made up that index or that ETF was going to go up as well? And maybe you could just trade that individual stock? Or maybe it would translate over onto the Dow, because 25 points in 3 months transferred over onto 2,000 Dow Jones Industrial Average points. That's how powerful this simple technique is. Let's look at some downward examples, okay? HCA, this was just a month ago, all right? Price is kind of oscillating above and below, but now we're well below. We have a series of red bars. We have 1 green bar followed by 1 red bar. Now, we've just turned the rules upside down. That is our rule that the market's telling us is translating it wants to go lower. If we're going to do anything, we should either be on the sidelines, not even think about buying this. I don't care what some analyst is estimating the earnings are going to be or saying this is a great buy. Don't do it. Listen to the market. Don't listen to outside sources. If there's one concept, if there's one philosophy that we preach to all of our students around the world, is that the only thing you should be listening to is the market. So the market's telling us a downtrend is most likely to ensue. And guess what? It didn't happen right away. In fact, we went for another couple of weeks. We got one more sign right here and another one right here. So you're saying to yourself, well, gosh, how come this downtrend hasn't happened? Well, sometimes you just have to wait for it a little bit because, as you can see, it eventually kicked in 20 points to the downside. Now, had you bought somewhere around here thinking that, don't listen to that Steve Primo guy, this is a major support area here, and we're going to take off. This is a major support. All the analysts say you got to buy it because the institutions are buying around here. And sure, you would have had a nice week or so of feeling comfortable until this happened, right? The market always tells you what it wants to do. So why not just listen to that? How about WDFC? Price was originally above the 50, but now that we've crossed below it, we have a series of red bars, one green bar followed by a red bar. That's all we need to know that the market is telling us most likely wants to go lower. 15 points coming into the middle of April, and then another one just a couple of weeks ago. Tesla, okay? We've all know Tesla has just been really, consistently headed lower and lower. Well, it's, the only way you've lost money in Tesla is by trying to buy it because the market has been giving you signals over and over again that it wants to go lower. But once you learn these simple rules that were taught to me some 4 decades ago, you'll start to be more and more consistent. For example, even if you didn't have the PET-D, if you just applied the 50-period moving average, go back and look how long Tesla has been below its 50-period moving average. Why would you want to buy anything below the 50? It's a recipe for disaster. Now, if you want to fine-tune it, apply the PET-D. You see a couple of green bars followed by a red bar. Well, now we're fine-tuning that a really high percentage downtrend is about to occur. And look what happened, okay? The stock went down 60 points coming into just the last week of April, this last week. And you had a number of chances to get in here, here, and even here. This just happened last week. How about WBA? Another really extremely simple example with limited data. You don't need a lot, going back a year. You don't need to look at the earnings. You don't need to know, even what the company does if you don't want to. Sure, if you want to do those things, you can, but why? All you need to know is that, well, most of the bars are below the 50. All right, we had one close above, and then the next bar is red. So that's telling us the market wants to go lower. That's all we need to do. Remember, we just want to keep it simple. 19 points coming into the last week of April, just last week. All right, if you missed that one, the market gave you another chance here, and then even another chance here just a couple of weeks ago. How about the spiders? Now, this is going back a bit, but I'm sharing with you, once again, just the same way we talked about the QQQs, you could apply this to an ETF that represents the S&P 500. That's the spiders, okay? Now, I'm sure many of you may say, I don't trade the spiders, Steve. They're too expensive. I understand that, but you could use this as a directional tool once again. So let's just say if you got a downward signal in the spiders, don't you think most likely that the market's going to go lower and that maybe you don't want to be a buyer, or maybe you should raise your stops in whatever positions you have are long, or maybe you should start, seriously looking at some shorting opportunities, because the exact same setup occurred in the spiders in the beginning of December. We all know what happened in the market. Remember at the end of last year, how it fell out of bed? Well, the market gave us a great clue. We had one close above, but then right back down below with a red bar, okay, after a series of green. That's all we needed to know, that the market's telling us it wants to go lower. We have no idea how low, but in the next couple of weeks or 3 weeks, it went down 37 points. 37 points, okay? Now, if you want to see what that transferred over onto the Dow, over 3,300 Dow Jones Industrial Average points, okay? You think that could have helped you at least to stay out of the market if you were thinking about buying, saying, you know what? If I got a downward trend signal in the ETF that represents the S&P 500, I don't think I want to be a buyer of the market. Okay, so we've looked at stocks, we looked at ETFs. Let's look at some other markets or some other time frames, all right? We'll stay with stocks, but let's look at a weekly chart of Disney. Okay, let's say you're a swing trader or an investor. Well, we do not change things because we change time frames. I know a lot of systems or a lot of methods do that because, well, you have to rearrange the rules and alter them because now we're trading currency pairs or now we're looking at 5-minute bars. That's silly. If something works in one time frame or one market, it should work in other. The same thing should work in other time frames and other markets. You don't have to change things. So we're above the 50. The majority of the bars are green. We have one red bar, another red bar, followed by a green bar. Okay, this was in the beginning of April, just last month, 30 days ago, on a weekly chart. In the next 4 weeks, in 1 month, the stock's up 25 points. Okay. You think you would have had to look at the earnings or what the estimates are for Disney or what the company is going to be doing or the CEO? You could if you want to, but there's no reason, absolutely no reason. All we looked at was what the PET D in the market was telling us. How about a 30-minute chart of IBM? What if you're an intraday trader? Okay, well, right here, this was on March 4th, I believe. This is just going back this past week. As we can see here, March 3rd coming into the 5th, I should say. We crossed below, so now all the bars are red. We have one green bar followed by a red bar. So the market's telling us on a 30-minute time frame it wants to go lower. Nothing much happens for this day, the 5th. And then we have another setup, okay? So it looks like we're going lower again. And then, guess what? 5 points to the downside. Now, this is intraday trading, but still, you could do very well having this tool in your back pocket. I'm sorry, I got confused with this. I was thinking this is May, this is March, going back about a month or so. Let's look at a 4-hour chart of the euro yen. Let's entirely change the time frame and entirely change the market. We're looking at currency pairs now. Since we're entirely changing things, we have to change the method, right? No, everything stays the same. We are below the 50, so the overall trend is down. We're not going to be a buyer, but we need to fine tune it a bit. So we have our first two green bars, and there's our first red. Now, where most people would say, but gosh, Steve, we closed down. This is oversold. Look at it. It's already gone down the entire range of the last month. I would look for this to bounce, right? Look at what is the market telling you? The market's telling you it wants to go lower. If you do get a bounce, apply some type of shorting opportunity to that rather than want to get long. Because you had a 1 or 2 day bounce, you could have gotten short, and look what happened, 150 pips in the next week or so, okay? Roughly about $1,500 per contract. Now we can go down to a 10-minute time frame of the E-mini futures, okay? This was just last week, the last week in April. We crossed above the 50, so now the overall trend is up on a 10-minute time frame. The bars are green. We have a series of 3 red bars followed by 1 green bar. That's all we need to know that the market wants to start going up. That's all we need to know. Now we can do whatever we want. We can buy at the market. We can wait for one of our strategies or systems to generate a buy signal, but we're only going to be a buyer. And as you can see, the E-mini went up 21 points later on, about 2 or 3 hours, okay? It's over $1,000 per contract. Now, we're not saying you would have made that because it's up to you where you want to get out. It's up to you where you want to get in. But you had that much room to work with just off this simple trending tool. Lastly, let's look at crude oil. A lot of people have been saying, boy, how did I know that oil was going to go up so much? I mean, there's no way to have known that, right? I mean, gosh, I'm not sophisticated enough to look at commodities or to read all these reports about oil and what's going on economically around the world. Once again, that's silly. I don't either. I don't know any of that stuff. But in order to get long crude oil, you would just use the same technique. All right. On our platform, you would click on buy sell line, click on 50-period moving average, and right off the bat, right here at the end of January, coming into February, you knew that the overall trend of crude oil was up. You didn't know how high it was going to go or how long it was going to last, but you knew that you should only be buying crude oil if you were going to be doing anything. You shouldn't be selling it. Why? Because crude oil is telling you it wants to go higher. Now, let's fine-tune this a little bit. Let's bring some short-term activity into it. We click on the PET D, and now we see that we have a bunch of green bars. We have 3 red bars, followed by the first green bar. What is the market? Not the economic reports, not the oil index, not what's going on across the world in another country. What is the market telling you? Telling you there's an uptrend most likely taking place right now. And if you're going to do anything, you got to decide quickly because look what happened in crude oil. Okay, this is the commodities. We have data for commodities, futures, currency pairs, even Bitcoin. You can apply this technique to virtually any market, any time frame. Okay, so before we go to question and answers, let's recap. Remember, if you're going to use this technique, all you need to do is apply the 50-period simple moving average. That automatically tells you whether you should be a buyer or a seller. Why? Because when price is above, the market, not me, the market is telling you the overall trend is up. When price is below, the market, not some guy in a chat room, but the market is telling you the overall trend is down. So you just want to be in sync with the overall trend. Now, if you want to refine it and find out the short-term trend within the overall trend, you apply the PET-D. Probably the most powerful tool we have at Specialist Trading. We have literally dozens of ways to apply it. I just share with you one simple technique. Now, extremely important points to remember. This is not a trading strategy. I know a lot of you may be students of the PET-D, or a lot of you may be thinking about getting and saying, I'm going to buy this and I'll buy it in the first green bar or sell the market in the first red bar. Sure, you can do that if you want. But remember, in order to have a full-fledged trading strategy, you need to have advanced entry signals. You need to know exactly how and when you're getting in. You also need to know about stop placement. What if it doesn't work? Remember, I told you this is not 100% guaranteed. And we saw examples I shared with you where you had to wait around for a while before it kicked in. Would you get scared and stop yourself out before it kicked in? How would you know where to place your stop if you're wrong? Or what about exiting? We didn't share anything about exiting. Would you get out with just a quick profit, or would you stay in as long as possible? And then lastly, we never talked about money management. How many shares, how many contracts should you be trading? How much risk should you have per trade? Those are all extremely important pieces of the puzzle to a strategy. You need those. So remember, this is just a technique that highlights or puts a spotlight on an opportunity for the market to go up or down. Then it's up to you to put some structure to that, okay? So as we close here, ask yourself, and ask yourself honestly, 1/3 of 2019 is already over. It's over. Do you think this trending tool can help your trading for the remainder of the year, okay? Look back at your last month P&L. Look back at your last week. Could this tool have helped you? Would you like it to help you going forward? Well, this brings our special attendee discount today. We're going to offer you the PET-D at a great discount. This is the PET-D, the Primo Early Trend Detector, a roadmap for any market. The color bar algorithm, it includes the add-on, excuse me, if you want to use your own platform such as TradeStation, Metastock, NinjaTrader, even Thinkorswim. There's a special way to use it with Thinkorswim. If you want to apply the add-on to those platforms, you can do that, okay? We also include 2 continuation trading techniques, 2 pullback trading techniques, and 1 trailing stop technique in the course. You can apply this to any market, any time frame, and this all comes with educational correspondence from yours truly. But we're also going to throw in another bonus. To make it simple for you, we're going to add the PTS Primo charting platform. Remember, everything is 1 click away. I know a lot of you may like to use Metastock or Sierra charts, but you're going to have to go through the work of uploading it, go through the work of searching for it each and every time you want to apply this. With our platform, it's 1 click away. Everything is right there. You saw how simple it is. So there's nothing you have to search for. You don't have to open up an edit box or a system box. It's right there, okay? Let me show you what you're going to get. We're going to throw in a full year, 12 months free, okay? You're just going to pay for the PET-D. Now, this is close to a $2,000 a fee usually for using 1 year. That's how much it's worth. 12 months, totally free. Now, you're not just going to get the PET-D on this. Let me show you what else is offered in this. Obviously, the 1-click PET-D access on our platform. You're going to get our enhanced buy-sell line. Remember when we opened the buy-sell line, we got the drop-down menu. There were 4 different ways to apply it. You're going to get all these different ways, and we show you in the course how to apply that enhanced buy-sell line. We also have a strength of trend tool. This is something I developed with ProTrader Strategies, a great technique. I've given some webinars on it in the past that will really tell you the strength of any trend. So oftentimes you can detect when it's running out of gas and when it's time to move your stop ups or even exit if you want, okay? This includes a signal scanner. We have a lot of different other proprietary tools on there that you can scan for on the platform. Over 90 of the most prominent technical indicators, but once again, we're not here to tell you how to trade, only to teach you. And if you feel you must look at economic reports and you need the news, we've supplied you with free Bloomberg TV. There's an icon on the platform. It's our media page icon. Click that on and you'll get a window of live Bloomberg TV, excuse me, that's live, that's talking about any news report, any economic report coming out as it happens, okay? So that's on the platform as well. And then finally, we have really great personalized tech support. Any reason you can't load up a chart or can't get a video, we'll be there to resolve the issue in a matter of moments. So this is all included. It's roughly about a $2,000 value free. You're getting it for 1 year free. So once again, here's our roadmap for any market. Here's our special discount. Now, normally the Pet D by itself costs close to $5,000. We're going to give you the Pet D course and application and the platform for only $29.95. But we still realize that may be out of range for some traders. We have even a better bonus. For payment plans, if you're interested in a payment plan, we have for 1 day only, $14.97, a one-time fee of $14.97, and then you just simply pay $97 per month. It's that simple, okay? We're slashing the price of the Pet D tremendously. You'll still get the free platform for 12 months, but for $1,500 plus $97 per month, you'll have all this. I mean, look at the examples I just shared with you that happened this last month. Do you think they could have helped you in your trading? And then think about the price and think of what a value this is. So here's how to take advantage of this. Contact Pro Trader Strategies. They handle all of the discounts and all of the course costs. They can provide you with that payment plan. I would recommend and suggest calling them right now because there's no obligation. They would be more than happy to answer any question concerning the payment plan or what else is included. And they have trading consultants manning the phones right now. Once again, there's absolutely no obligation. They would be happy to answer any question you have concerning the platform or the costs. So I would suggest calling them at 310-598-6677. Now, this link you see at the very bottom, I don't believe it's a live link, so I don't know if this will work, but I would suggest going to the far right chat box where they just moments ago posted the link that is a live link. So that will take you automatically to the sign-up page, or at least a little bit more information, and then you can decide for yourself. But basically, that payment plan of $14.97 is really just good for the next 24 hours. So after that, we're going to go most likely to the close to $5,000 range for all of this. So I'm sure if you talk to Pro Trader Strategies, you still could get the $29.95 deal, but I don't know if the payment plan will still be in effect. So I'm going to leave all this information up here. And remember, I said if you have any questions, be sure to to write them in right now. I'll open up the question and answer box and answer any questions you may have. Okay, first question. Are you giving away the Pet D indicator to whom attend this webinar? No, we're not giving it away. No, that wouldn't be a, that's a fair question. I didn't mean to laugh, but that wouldn't be be a disservice to all the people that spent close to $5,000 for it. But we're giving you a great discount, as you just saw, and we're giving you a chance to get in with a really low payment plan, okay? Let's see, next question. There are examples that work and then there are examples that don't work. How do you pick the right ones? Well, it's not, remember, this is not picking, because when you say pick, it gives you the feeling that you are trading with this. Remember, this is, as the title suggests, a great trending tool that you've been searching for. So this is just refining what the trend is. As I stated, I don't know if you remember, if you're at the beginning of the presentation, but I stated the easiest way to become consistent is to be in sync with the trend. The trouble is most traders don't know how to find the trend, or they're using standard or generic tools. So all this does is, with a high probability, is get you in sync with the trend, but it's not a strategy. It's not telling you, okay, buy or sell at the market. It's telling you that now you should be applying or putting some structure to that. So if there's, all of a sudden a downtrend set up, and you see the market bounce for maybe a couple of days, well, then maybe you want to get short that, apply some structure to sell it. We have a number of strategies that would be able to apply to that. That's what we always tell our students. We say, listen, use this as an uptrend or downtrend technique, and then apply our strategies. And we usually have anywhere from 3 to 5 different setups using our strategies in these really strong trends. But today's presentation wasn't about a strategy. Today's presentation was just about getting you in sync with the trend, because that's the number one reason, in my opinion, why traders fail, is because they're not in sync. They're listening to some guy tell them in a chat room that this is too high, you have to sell it, or this is bottoming out and the earnings are going to come out, it's going to go higher, so you have to buy it. But they're not listening to the market. So that's all the Pet D's trying to do. It's trying to teach you how to listen to it. So when you say pick the right ones, there's nothing to pick. It's just telling you what it wants to do. Then you have to determine what strategy you're going to apply to that, okay? What structure you're going to apply. I hope that makes sense, okay? Remember, this can be applied, as I stated a number of times, any market, any time frame, any direction. It's our philosophy and our concept of trading that no one should ever tell you how to trade. You should be taught things that have high levels of consistency and some structure. But then once you're taught these things, you should be able to decide how you want to apply them. Okay? Whether it's looking at a 5-minute chart, a monthly chart, whether you only want to use it, for a certain market, it's entirely up to you. So for me to answer what's the best time frame or what's the best market, that would be doing you a disservice, because then we go back to, once again, the way the entire industry works is by you listening to someone tell you what to do. And I don't believe in that. Okay, so that would go entirely against our philosophy. Excuse me, any question? Oh yeah, people are asking about what are the platforms that you can use this for. The major platforms, most of the major platforms such as TradeStation, Metastock, MT4, Sierra Charts, NinjaTrader, and I believe some other ones which I'm forgetting about right now, but also Thinkorswim. But the only thing is with Thinkorswim, they only allow us to use their data, so we will set you up with a free NinjaTrader that can use the Thinkorswim data, and then we'll just simply apply all of our add-ons onto NinjaTrader. But once again, even if you have these other platforms, which I'm sure you're very happy with, I've had other platforms that I've used prior to the construction and the formation of the platform, our platform, PTS Primo charting platform. And even in my 42 years, I must say, this is the simplest thing I've known to apply all these things that I've been trading with. So we specifically made it that way. So I would suggest, if you're getting it free for a year, I mean, I would say don't worry about the add-ons if you don't want to. Just apply them to your own, to 12 months of using the platform. It's all up to you, but remember, there's more different suggestions and ideas and ways in which to apply it. Contact Pro Trader Strategies. There's absolutely no obligation. They would be more than happy to answer any question, okay? Okay, as we conclude, I just want to say I hope you learned a little bit about this and saw how much attention we give to detail, to trying to educate you, because that's what it's all about. We're not going to sit here and tell you we have a master system that will never fail and that will enable you to retire by this time next year. We don't believe in that. All we want to do is instill a sound sense of consistency in your trading by educating you in what works. Then you decide. And we're out of the picture entirely, because now for the first time, you'll be able to sustain yourself and you make your own trading decisions. In my opinion, it's the only way one can become consistent. So as you take one last look at our disclaimer, I just want to say thank you so much for attending today. I hope you got something out of this, and I look really forward to you becoming students of mine in the Pet D course. Thank you so much. I'll see you next time. Bye-bye.